Wow. Wow. So you take that out for 10 years, that's 1.4 million. Take it out over 20 years. Hi, I am John Stevenson, the Guaranteed Retirement Guy, and today I'm going to talk to you about what, in my opinion, is one of the best annuities out there in the industry. I mean, if you're looking for lots of growth, and if you're looking for long-term growth, and I'm talking 20 years worth, then stay tuned because this annuity is a game changer. So this annuity is from American Equity. Now, American Equity, they're offering an annuity which is called the Income Shield 10 or the Income Shield 9 for California residents. Okay, so if you're looking for a lot of growth, these actually provide 6.5% every single year for up to 20 years, guaranteed. Okay, and of course, this is for the purpose of receiving income later on. So this is your income benefit amount. Okay, the index side is completely separate, but if the index is going down, it doesn't matter. The income benefit is still growing at a 6.5% compounded every single year. And that can add up to quite a bit of money for income later on. So I'm going to share my screen and I wanted you to see exactly what this looks like. Now I am looking at a 50-year-old client. Okay, this is a single male. And of course, the numbers will be a little bit different if it's joint income, but let's just do simple math right now, okay? The withdrawal rates are always higher if you take out a single annuity payment, on a single life. But if it's a joint and you have a spouse that has a different age, then obviously that's going to change things up. But that's important. If you are married, you definitely want joint income. So let's take a look at this. We've got $500,000, and I can play with different numbers after this, but $500,000 going in at 50 years old. So maybe you've got an old 401k or IRA, or maybe just a brokerage account, and you just want to put some money away for some guaranteed income. You want to leverage as much as you can for a pension, a large pension later on. Well, $500,000, what can that give you as a single male? Well, let's take a look. If I go down here and I say, all right, well, what are the top annuities? Well, of course, today's video, we are talking about the American Equity Income Shield because Income Shield is a really, really effective annuity for lots and lots of growth. And that's why you'll notice if I push this out 15 years of 6.5% growth gives you a guaranteed $93,358 per year the rest of your life. Okay, this person starts income at 65 and they take that out even for 10 years, just 10 years. That's $930,000. Okay, but they're probably going to live longer than that. So let's say 20 years. They're taking out over $1.8 million. And they take it out for 30 years. By the time they're 95, they've taken out $2.8 million in income. That's huge from only $500,000. Now, the sweet spot for this is usually between 15 years and 20 years. If I go down a little bit, I'll show you what I mean. Let's say this person decides to retire at age 61. Well, obviously the Equitrust is better for that because their roll-up rate and their withdrawal rates are best between around, I would say 1 to 2 years to years 11 or 12, okay? So if you're looking for something more long-term, then American Equity gives you that 6.5% roll-up rate for up to 20 years. Now, obviously I'm deferring this for 15 years, but let's say we just do the max, okay? Let's say this person wants to wait till they're 70 to take Social Security because they want to max that out. They want to get that extra 8% growth, for a few years before they actually turn that income on. And they want to maximize, of course, the income from this annuity that they only purchased for $500,000. Well, what a difference. Now we're looking at, instead of $93,000, we're looking at $140,000 of guaranteed income. Wow. Wow. So you take that out for 10 years, it's 1.4 million. Take it out over 20 years, it's 2.8 million, and so on. Okay, of course, the income is guaranteed for life. So let's dive into this and see, all right, well, how does this work? Why are they on top? Why are they consistently above all these other carriers, all these other annuities? I mean, I could scroll down. You can see there's just so many annuities out there. But if I'm looking for highest income, the annual income this one is giving you is $140,000. Why is that? Well, let's take a look. And again, this annuity really is best for people who are going to wait probably between 15, 20 years until they actually take their income. So let's see how this grows. Well, first, it's the Income Shield 10. What does that mean? Well, 10 means a 10% premium bonus. That means you put $500K in, you're going to get $50,000 sitting in there. So you log into your account once this contract issues, you're going to see $550,000. In fact, they will allow you to add more premium for the first year and still get that 10% bonus. So put another $500K in, you're going to get another $50,000 put in there. Okay, so that's pretty nice. And of course, if you want to add to this after that, you can do that. You just don't get that premium bonus, but you still get that roll-up rate of 6.5%. So this is really effective for people who want to, roll some money into this and then keep contributing until they retire. Then you're just going to compound what you're going to get for income. So if you notice the benefit-based column right here, you'll notice that it starts out at $585,750. That's at the end of 12 months. Okay, so at the end of 12 months, you have $550,000 that earned 6.5%, which of course equals $585,750. Then of course, second year, the same thing. 585,000 multiplied by 6.5% gives you 623,000, and so on. So you notice every single year, this benefit base grows by a huge amount. By the time you let this thing grow, if you decide to let it grow 20 years, you don't have to wait that long, but if you do, it's going to grow to almost $2 million. Look at that, 1.9 million, 38,000. That's huge. And then, of course, you got the withdrawal rate of 7.25%. Both of those multiplied together gives you over $140,000 a year in guaranteed income. Wow, it's like almost 12 grand a month. So that's really, really good income from only $500,000. And the reason, of course, why that works is because you have that long roll-up rate. It lasts for so long. And let me show you here on the notes, just so you can see the fine print. You see the premium bonus? There you go, 10% premium bonus. And then you'll go down a little bit more. You'll see the Income Shield 6.5% roll-up. Okay, 6.5 roll-up, of course, compounded for 20 years. If you decide to have it wait that long, you can see the fees, 1.22%. And if I go up here, you'll notice these fees coming out. See the fees? Yep, they're real. Now, of course, they only affect the account balance, right? Now, this, of course, is showing account balance if it earns zero interest, which is based off the S&P, which that's kind of ridiculous. It's going to earn something. But they got to show you both. So they got to show you, here's the guaranteed values. If this earns nothing, then, of course, your contract value is going to go down. But your income's guaranteed for the rest of your life. And that's what you're getting it for. You're buying this guaranteed pension that's worth probably $2 to $3 million. Okay. Now, if I go over to growth, it's still not going to get a ton of growth. Even with that, you can see, it starts at 550 and slowly the fees eat it away. It could earn more than this. But again, I want to be conservative when I show these. And so again, and for me personally, I'll tell you, I don't care about the fees. I want the income. I want the guaranteed pension. And if I got to pay an extra 100 grand in fees, so be it. Because if I don't pay the fees, I'll show you. Let's say I'm like, well, you know what? I don't want to pay any fees. No fees. All right, look at this. Income Shield 10. Great. Still give me a 10% bonus. Awesome. But guess what? The income's $55,000. Ooh, well, it's not that great. It's like, 85 grand less? Yeah, that's kind of a big deal. When you think about even 10 years, that's 850,000, 20 years, double that, right? Like 1.7 million in less income. Okay, less. So if I'm going to pay fees, and I'm like, all right, well, if I'm paying $100 or even $150,000 in fees to get another $1.7 million in income, is that worth it? Well, you tell me, would you pay $150,000 in fees to get another $1.7 million? Most of the time, if you're getting something that's worth it, of course you'll pay the fee. Now, if you're paying just a financial advisor to manage your money and you don't really need his advice, then the fee isn't worth it, right? For annuities, if you're paying a fee for an income rider, you're getting something in return, and it's usually very, very substantial. So, and I'll show you this real quick so you can kind of compare how this one breaks down. They still give you the 10% bonus. That's great. But, and again, they show you both scenarios. They show you, hey, if of course this earns nothing, your account balance doesn't go down. See the difference? You're not having it eaten away by fees. That's nice. Lifetime withdrawal rate though goes up much lower amount. Doesn't end up at 7.25. It ends up at 5.63. That's because you're not paying an income rider to get a higher withdrawal rate, and you're not getting a higher roll-up rate, and I'll show you that next. So you notice that the ending balance is around $990,000, and they don't give you a roll-up rate very long. They only give you the roll-up rate until about 15 years, because you notice at year 15, the amount stops at $990,000, and it stays at that amount afterwards. And so if you go down here and we'll look at that, you see the 10% bonus is still there, but here's the difference. Now, instead of a 6.5% roll-up, you get 4% roll-up, and it's not for 20 years, it's for 15 years, okay? Big difference. So yes, you are absolutely paying a fee for more income, and your account balance will go down faster. But of course, if your whole goal is to have income, then who cares, okay? That's really what it's for. If you want to leave a legacy to your kids, then put it into another annuity that's just for growth. Don't put any fees. If it's not for income, we don't need an income rider, so we don't need to have fees taken out, right? Then we could just set it up for just market protection, get some growth, and leave it behind. But for this scenario, and for a lot of retirees out there, they're looking for the highest growth rate, they're looking for the highest withdrawal rate, and the highest guarantee. And if you're wanting something that gives you highest guaranteed income, then I would urge you to take a look at the American Equities Income Shield 10, and of course, Income Shield 9 in California. So I specialize in these annuities and many others. I look at lots and lots of annuities. Okay, this is just a particular one I wanted to talk about because this one is best for a certain time period of growth. Maybe you want to take income next year. You have a retirement age that is, just a couple years down the road, and you don't want to wait 15 years, that's fine. There's annuities for those, for those withdrawal periods that are so much better for right now. If you want to take income now versus waiting 15 years, I'll set you up with those as well, because I show everything. I mean, if you're looking for an annuity for now, for 5 years, 15 years, 20 years, there are certain annuities that work better for different time periods. Okay, so that's what I do. If you want to book a call, there's a link below this video and we can chat some more. So happy to answer your questions, and I'm not going to try to pressure you, try to sell you into anything you don't want. Again, I'm just here to help. But if you are someone who is willing to wait or has the time to wait, then you want to consider this annuity because it has a lot of growth, and it's just phenomenal right now. So take advantage of it if that's something that you think will help you. So anyways, thanks again for watching, and we'll see you next time. So annuities can be hard to understand. If you've got a question or there's something I haven't covered and you're just curious, please go into the comments section and share whatever question, whatever comment that you have. I'd love to hear from you.